Hello and welcome to Chapter 5 of the Accounting Insights series. Today we are looking at sales invoices not yet paid up. On our book, as per lessons, it's Chapter 5. You can see there from the contents. So today we're going to update our list of debtors, i.e. our customers who have not paid their invoices. Since we did the bank account in Chapter 3, you saw that some of the customers, quite a lot of them, had actually paid for their invoices. So we're going to go through those bank receipts and update our list of customer balances here. So let's go to the work pack and we're going to go to the paying in book slips, and we can see the details here of our customers paying in. So the first one is John Smith. He paid in £4,700 and we'll update his listing here. So we got a column here that says paid, and we put in 4,700. Now in here I'm using Excel and it's got a formula. Once you update the paid amount, the outstanding balance goes to 0. So we've updated that one. Go to the next one, that's W. Samuel, and they paid 707.50. So they paid everything, the balance is 0. The third one is John Tarzan, and they paid 3,525. The fourth one is Harry Limes. That's Harry Limes' list there, or line in the list. So they paid 3,525. And the fifth one is V. Akelo, and she paid, that's V. Akelo, she paid 4,700. So basically all our customers are paid except the last one, which is the coffee shop. In the coffee shop, you can see initially they had purchased 4 computers, they returned 1, and we gave them a credit note for that one. So what we're going to do, we're going to use this credit note to reduce the amount that the coffee shop owes. So what we'll do here is put in minus 1,175. That will set that to 0, and then we put in here plus 1,175. So we've updated our list of debtors, and the sales invoices that are not yet paid up is just this one here that relates to the coffee shop, and the amount outstanding is 3,525. Normally when you're doing accounting software, as you enter these amounts, if you remember when we're entering the bank receipts, you'd actually enter the other side as well to update the customer list. So we'll talk a bit more about that when I talk about using accounting software. But here you can clearly see we've done it in 2 stages, and the second stage we've just done here. So let's go back to our chapter 5. So we've got the first step we've just done. We went to the paying in slips and we've updated our list here, and yeah, we've done that step 2. And step 3 for the credit note, we've done that. Step 4, for each listed invoice, deduct the paid amount from the gross column amount. If you're doing this on paper, you need to enter your figures in accordingly as you update each cell. And the last thing to do is total up the columns. Yeah, so basically we've had a net of 23,500 cash come in, and we use that to pay off our debtors, pay down our debtors, and there's 1 debtor left outstanding, and we know who that is. This is easy to understand. There will be a bit more later on in the book, and I'll show you a brief preview of it. So this balance here is called our trade debtors balance. They're called trade debtors because they are the customers with whom we're doing the actual business trade with, and as opposed to if, say, we lent some money to one of the directors, that would be a loan director debtor or a director's loan account. We separate those type of debtors from actual trade debtors, and we call them trade debtors balance here. If you're working, as you can imagine, on a big business, there'll be so many customers. You can't keep all of them on one list like this. You'll have to, what big businesses do, they create an account for each customer, and they group those accounts into one big book called a ledger, and then they call the whole book the trade debtors ledger, or they call it also a sales ledger balance because they're dealing with sales to their customers. In other countries, especially in America, it's called accounts receivable balance or accounts receivable ledger. So I'm just going to show you what it would look like if we're using that method for accounting, and I'll go to our appendices here. We've got a few things in our appendices that show a bit more technical things about accounting, but all stemming from this simple example that we're working with in accounting inside. So here is the sales ledger, page 90. So I've got some description of why sales ledgers are used in accounting. It's normally where you've got lots and lots of customers, and to track each transaction, you have each customer have their own account. So for example, here we've got John Smith's account, and here we're using the traditional T accounts of accounting where you have debits on the left hand side and credits on the right hand side. So in this case, we sold on the 15th of January invoice number 1001 sales invoice to John Smith. So we debited his account 4,700. Now the debit means John is going to pay the business 4,700, and then when John paid the money, we debited the bank account and we credited his account. So we say, okay, John's account goes down by 4,700. Then you get the balance to carry down is 0 because the debits and the credits equal. There's nothing to carry down. So his balance brought forward or brought down here is 0. And you can see we got for the next customer, Samuel's, their account there, and the invoice, and then the check paid, balance to carry down 0. Keep going. I skipped a few there. Sorry. Harry Limes and John Tarzan. So they all got their accounts. So when you get time, you can just review these and you get to understand how accounts, sales ledger accounts, are kept using the traditional T method of accounting with debits on the left hand side and credits on the right hand side. I'll just show you what's happening with the Coffee Shop Limited, because that one had a credit note instead. So we had the sales invoice for 4,700. So we debited his account. Then he returned one computer and we credited his account. So you can see the credit note there, 1,170. So you take that away from that and you're left with a balance to pay of 3,525. You close off the accounts, you can see the total balances, and you bring that balance down here, and it's the coffee shop's balance on the 1st of January, 3,001. The coffee shop still owes the business 3,525, which you can see is the same result we got here. So the method we've used here is I've used a simple method so you can see everything on one page. This is the method that accounting systems use, and this is the traditional ledger system that has been used for hundreds and hundreds of years before computers. And now we got computer software, you can have your accounts presented in this format. So that is essentially updating your list of sales invoices and showing those which are not yet paid up. Thank you for listening. On the next chapter, we'll be talking about purchase invoices. So we'll be doing a similar thing with purchase invoices, but in this case, we are paying the suppliers, and we need to update our suppliers' accounts to see who is yet to be paid. And I look forward to seeing you on that lesson. Thank you.